Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 7th of July here in 2022. We have the jobs report. We'll actually start there because that will be a potential market mover for tomorrow's session. So in Friday, that'll be July 8th, we will see what the weekly or the monthly unemployment and employment situation will be. What is the jobless rate? What is the unemployment rate? How many jobs are created or lost? And all the information that comes from that. We call it the monthly jobs report. It'll take place 1 hour before the market opens. Where are we starting the session before that potentially big event? We've had the Fed minutes in this week. We've had China stimulus. We've had some other big economic headlines. So where will we start Friday as we go to the end of this holiday week? Starting with the S&P 500, looking at the SPX, we see that the market continues the downtrend. So as we look at this, we'll put this in perspective, just putting the daily chart on display. Going back to the beginning, we have our high. In fact, that's the high of the year. 48.18 was the high of 2022. And since then, it's been smooth sailing to the downside. And that's going to be our first sell swing, counter trend swing, higher low, lower high, or lower low, lower high. That's another lower high. All this is going to be one swing and all the way back for a counter trend rally. Back down to new lows. We just draw out these trend lines to see that the market, S&P at least, continues a downtrend. So where are we now and where is the market headed? If we be specific about it, it is a bear market rally or a counter trend rally. Trend being down, but the market does not go straight down. It wiggles and squiggles or waves or what I like to call swing. So the market is in a swing to the upside, but that will be officially a bear market, counter trend, counter downtrend, bullish rally. And if that hasn't confused us, where would the market possibly trade up into, at least in the S&P? 3,900 is a good spot to look at. That's where it is at the moment. But from there, might we see 4,000 on the SPX? That's what happened last time we had the counter rally, is that we hit these downtrend channels, or at least here, the 50-day exponential moving average. At that point was 4,200. Might the market sneak its way up to here? Absolutely. And the bears would step back in for another potential bear market, pro-trend, downtrend swing. That's what I'm looking for into the future in July. A little bit of a more push to the upside and then possibly a turn down like we saw into late May and early June. We'll just quickly look through our sectors, and the financial sector same in terms of our comparison of lower low, lower high, lower low, lower high, lower low, lower high, lower low, counter trend rally. That could take that up to about 33.50 before turning back to the downside. Beyond that is our technology sector. Looking at XLK, I won't draw the levels, but same logic. Could see it push to 135.50 and then turn to the downside. Now, the market could easily turn on the jobs report, turn the other way and stop falling or fall shy of these upside little targets to play for. We'll be watching that closely. For the industrials, it's 150 per share, or sorry, for the consumer discretionary, it's 150 per share. Now for the industrials, it is about 91.50 on its chart. Materials does not have the same type of downtrend, but it does have a sideways long-term consolidation that is broken to the downside. Energy will be the one sector which continues to be, strangely enough, bullish or positive on the year. So it does not have a downtrend in motion. Energy and crude oil prices, now that did snap the trend to the downside, but it continued to be bullish for the better part of 2022. And that's right there with crude oil. So before we look at other sectors, just a quick note about the inflationary turn and possibly a break in these patterns. So quickly looking at wheat, ZW is wheat futures. It was trending up. It had the quick inflationary play. That was Russia, Ukraine, and some of the sanctions. Wheat stayed strong. ZW wheat futures stayed strong. But what we'll look at and focus on as we push further into July is this strong, rapid sell-off, or if this is, we use certain terms here, if this is inflationary, this would be deflationary, or at least a pullback against those high prices. Now, wheat as a commodity can go into bread, different little productions, so it's good to see that down as it is. But the same can be true within soybeans. Not something you probably trade. Never have traded soybeans. I've never traded soybeans, but at least watching how the deflation has taken over. Again, price rising within commodities, price falling, generally speaking, deflationary. And that'll play off in other commodities that have been overextended and made new highs and remain strong for the better part of 2022, and that's changing at the moment. We'll then talk about the bond market. Now, this is different. It's the strongest swing in 2022. This is ZN, our 10-year Treasury note, which continues the downtrend. On the flip side of the downtrend in the bond prices is the uptrend in Treasury yield. That's again the Federal Reserve raising rates and how that Fed funds rate trickles through the interest rates on bonds. Now, the Fed does not control the rates on the bond market, but it does trickle up the yield curve as it is. And that is a rising interest rate environment. That's where a lot of the technology stocks, Netflix in particular, some of the other main monsters of tech, have been affected much more negatively than other markets or sectors. So that is seeing a decline in the yield. That's translating into TLT at least in another bounce. But the bond market in general does continue its downtrend, and that will play alongside the equity futures market, including the S&P and the others, Russell and the Dow. So the key level to watch right now going forward in the Russell small cap index is about 1700, and its target is about 1800. So 100 point swing, volatile sessions in the Russell. Stocks that are on the play, we'll finish up by looking at some of the other sectors. XLP is in a strong trading range. That's roughly speaking, it's still down. All sectors are down except the energy, but it's not as down as much. It does continue. Staples are a defensive play. They're more so range bound, but so is or are the healthcare stocks. Healthcare stocks, XLV, sideways trading range. And we'll finally look at our sector update with utilities. Still down on the year, but not by much. Not by a lot in terms of where we are at the moment and where we were at the beginning of the year. See, there's not a lot going on. There's a sideways trend, not uptrend, but there is the open, there's the now. We've gone down, above, and back to them. So it is a trading range. More so defensive sectors here, staples, healthcare, utilities, and our offensive, or what we might call risk on, things we watch on a daily basis, financials, technology, and the consumer discretionary sector, they are on the sell side, the bear side, and the downtrend side. So we'll continue watching these as we push further beyond the jobs report, how individual sectors will be in play. Of course, that's going to come out tomorrow. And a look at the visualization. Bullish across the board, finishing up the session here on Thursday. Leadership was in the Russell, 2.2%. Right behind that was the Nasdaq tech sector, 2%. There are our monsters of tech in general. One of the leading stocks in today's session, some of them were technology names. And those would include Google. We can see them right here, Google and Qualcomm, Tesla, NVIDIA. Some of those are not stocks you are familiar with looking at, and they're not large market cap stocks, at least NVIDIA and some of the others. But definitely Tesla, definitely Google, and then Qualcomm is up there as well. In terms of stocks, there's Qualcomm, and there's NVIDIA. Not as big as the other monsters of tech, but still nothing to ignore as the leadership was in these sectors. S&P again shows broad leadership. The only sector that was bearish at the close was utilities, but they make up a very small amount of the larger S&P 500. Leadership was in the energy sector. Again, that's not necessarily a large portion of the market, but ExxonMobil, Chevron, Conoco, and others would be in that list. And finishing up gold, speaking of things that are going sideways, for the most part, gold or gold futures or GLD in terms of our tradable commodity, it did have a rally in the earlier part of 2022, but it's closing now at session or yearly lows. That will be true for GLD and in the gold commodity itself. Key levels to watch remain about the 1700 level and about 1900, with the midpoint being we'll extend these trend lines forward at about 1800. So finishing up looking at gold, that is a sideways lengthy consolidation amidst the equity market that rallied and reversed, and of course crude that rallied and is seeing a pullback. I would not call that a reversal just yet, but seeing a pullback. And of course the bond market, which peaked at the beginning of the pandemic and is seeing continued downtrends to new lows. As always, be careful and safe. This is Corey Rosenlund with the Night's Theo video update for July 7th, 2022.